70% of Americans over 65 are going to need long-term care. And there's a lot of reasons for that. One of those is we're just living longer. And as a part of that, um, as we live longer, it's more exposure to things that can affect your health, right? My mother's example, she was diagnosed over 4 years ago. Thank the Lord she came into some money from my grandmother left her, a really nice financial windfall, but we're mowing through it because she's in exactly where she's supposed to be. And I'm very thankful that we can afford it. And she's in memory care. And that's exactly where she needs to be. But we've spent almost $400,000 of her money to take care of her over the last 4 years. And those costs are not going down, they're going up. The cost of care continues to increase.
Hey, what's up, guys? I'm excited for this episode of the Freedom Factory. You guys know the overall theme of this entire podcast is to help you guys get what you want from a time freedom standpoint, also a financial freedom. And today's episode is perfectly situated for all of you. As you guys know, in order to have financial freedom, you first have to have an income. You got to make some money. And we teach you guys how to do that, leveraging it. Then you got to learn how to keep it, because if you make a bunch and spend a bunch, you got nothing. And the final thing you have to do is preserve it, so that it lasts, multiply it. And today I've got a great topic for you guys, something that maybe a lot of you are starting to have to deal with, if not in the future. I kind of know the demographics of my listeners a little bit. I've got a good friend on with us today. And so let me bring him in and then I'll introduce him here. So there he is. What's up, Russ? How are you?
Hey man, I'm good. How are you?
Good. This is going to be exciting. Let me give you a little introduction here to our Freedom Factory family, you guys. This is Russ McBride. I've probably known Russ for a decade, maybe even a little longer than a decade. Met him through the business world, and we got to work a little bit together here and there, but I've always respected his work ethic, and our paths crossed again about a year ago, and we had a sit-down meeting in Nashville, Tennessee, and I got more excited about what Russ was doing, and I thought it was time to bring what he's doing to you guys and see if it's something that will help you achieve your goals. And so Russ is in the insurance world, and we know that's a big world. And truth be told, it's kind of a double, and I'm just speaking personally, it's a double-edged sword, right? Because we all know we need it, but we never want to pay for
it. Or talk to anybody in the insurance world. Yeah.
Yeah. I mean, and it's like truth be told, right at this moment, guys, I just not finished. My prep for a hurricane is going on at the moment. I just finished taking a shower and shaving to come in and do this podcast with you guys. And part of that prep is because if I don't get the boats off that dock and my boats are destroyed, the insurance won't cover it because I didn't take the steps necessary to protect my boat, even though I've got insurance. And, there's health insurance and car and all the insurance, right? Yeah. But something was told to me, guys, years ago as I was sitting down with some pretty smart business guys. And the guy looked at me and said, the one thing you can't mess up financially is insurance. Yeah. Because you don't get a do-over. He said, you can start a business and it'll fail, and you can build another business. You can go bankrupt and come back from that and be fine. A lot of rich people have gone bankrupt, come back and become very wealthy. But if you mess up on the insurance side, it can create so much debt that you never can get out from underneath it. Yeah. And I didn't take that statement lightly. So I've taken insurance very, very seriously. It's part of our financial plan, from, obviously the obvious health insurance, but life insurance and all the other things. Yeah. But we're going to be talking today mainly about long-term care insurance. It's a topic that is becoming more and more of a conversation in my worlds with people that I know because of the expense of taking care of our parents because maybe they don't have the money to take care of themselves anymore. And then maybe what we would potentially be leaving to our children to take care of us.
Yeah.
So, Russ, I'm glad to have you on here. I'd love for them to share a little bit of your background and what led you to the insurance world.
Yeah, happy to do that. First of all, thank you for having me. It's a pleasure to be on anything with you, and have admired you, you know, over the years working together, and seeing the success that you've experienced in empowering others. And so I'm thankful to have this time with you. It's still funny for me to hear you say insurance guy. I'm the CEO of Surience now, but I have to say, first of all, most importantly, I'm a blessed man with an amazing wife and a beautiful adopted son, Will, who's our little miracle. But I spent 26 years in healthcare. And so the last 6 of those I spent really focused on senior services. And what I mean by that is I worked as a VP for a home health company, consulted with a couple of companies. And so I was on the front lines really amidst this care crisis that we're in. We got a little bit of a snapshot of a care crisis in COVID, and it's going to kind of come back around in the way of what they're calling the silver tsunami, if you've heard of that, as baby boomers age into needing new services. And so, long story short, I was asked 2 years ago by our founder, Robin McVeigh, my business partner, to work with him in building a life insurance company. And when he first asked me that, I said, absolutely not. I have no desire to be the insurance guy or sell insurance because of everything that you think of when you hear that. But what I realized is that, and Robin is a visionary, and he saw there's a disruption happening even in the insurance space where, like a lot of things, it's becoming more driven by AI and things that simplify accessing it, and that's a great segue into kind of what we're here to talk about today, which is long term care coverage.
Yeah.
Uh, and so my story, my why, if you will, I've been around long-term care because my mother, I am an only child and the primary caregiver to a mother who is diagnosed with dementia and Alzheimer's. Sorry, it's
Yeah.
still it's still emotional, man. And what the reality is things like that you don't know to prepare for can rock your world. And it has definitely done that for my mother and us financially. And so that was a really good foundation for me to be extremely passionate about aligning people with where long term care is today, because a whole lot's changed.
Yeah. Is it interesting, isn't it, that not just this, but in a lot of things in our life, um, we kind of know out there, something like this might happen, but it doesn't become important until it enters our world. Like,
Yep.
we know there's children born with disabilities, but when it's your child born with a disability, all of a sudden it's right in your lap, it's your world.
Yeah.
And I could go on and on and on. I think everybody gets the point. But I was
Your
thinking
hurricane
as we were,
analogy. I mean, that's perfect. I mean, not knowing to prepare for a hurricane, to do all the thing you've probably been through this before. Think about the new guy that's a neighbor of yours who's never been through this right now, and he's getting rocked with all
yeah,
the things to
we
do,
got some
right?
friends that moved. They're friends now. They moved down from New Jersey a couple years ago,
Oh.
and there was just like this little storm coming, and he was all worried. And now he's like he's Florida hurricane proof now. He's like, yeah, it's a hurricane coming. Huh? I'm like, yeah. So once you've been through it a little bit, but the point is, I was thinking leading into this podcast today. We got car insurance, and we may go through a whole lifetime and never get in a car accident.
Yeah.
We've got homeowners insurance, may go through a lifetime and never having a claim. But long-term care, it's inevitable.
Yeah.
You're not getting around it. You're not getting around it. And so it's an important topic for us to discuss. And so because I believe, well, I'm going to let you tell the statistics. You know it better than I, but we spend a lifetime trying to position ourselves financially so that we can take care of our family and kids. And then when they're taken care of and they're on their own, we would like to have, the adults would like to have some freedoms and some abilities to do things financially as we mature.
Right.
And today, with the way things are going and our parents living longer and the expense there are a lot of people that have worked their entire life that are seeing all of that money erode, taking care
Yeah.
of their parents.
Yeah. And you're literally telling the story of my mother. So you're right. 70% of Americans over 65 are going to need long-term care. And there's a lot of reasons for that. One of those is we're just living longer. Well, at least over the last few years. Last year, I think we went the wrong direction, but um, overall, we're living longer. And as a part of that, um, as we live longer, it's more exposure to things that can affect your health, right? My mother's example, she was diagnosed over 4 years ago. Thank the Lord she came into some money from my grandmother left her, a really nice financial windfall, but we're mowing through it because she's in exactly where she's supposed to be. And I'm very thankful that we can afford it. And she's in memory care. And that's exactly where she needs to be. But we've spent almost $400,000 of her money to take care of her over the last 4 years. And those costs are not going down, they're going up. The cost of care continues to increase. And so, you know, um, for me personally, even with my mother in law as well, my wife's mom, we're working to take care of her, and she's at home alone now. We lost my father in law not long ago, and um, she had a health issue arise, and so we're using private duty home care to come in and spend a few days a week with her, just to do simple things like cook and clean, and that's a big piece to this. As you think about long term care, it's not everybody thinks long term care and thinks nursing home. It's not really what long term care insurance is trying to provide is your ability to age in place at home, as long as you possibly can before you have to access a higher level of care.
Because that's what
So,
people would want. I mean, I know when my grandmother, when I pass away, I want to pass away the way she did. She was in the hospital twice her entire life, once to give birth to my mother, and the second time, I think she had a hysterectomy. Like that's
mm,
it, twice ever in her life.
oh,
And she got sick and died 10 days later of pneumonia. Like that's the
wow.
way to go, in my
That's the way to
opinion.
do it. Yeah.
That's the way to go, right? But she
Yeah.
used to joke all the time, do not put me in one of those homes. She's like,
Yeah.
don't do it. She's like,
Yeah.
just put me in a room in your house. And she would joke, like, just push the food under the door. Like that's what she
That's,
would tell us.
yeah.
Like that's what people want. They want to be in their home, private, comfortable.
Yeah.
And so that's part of this piece too, is for them to age and be taken care of in a graceful way, not in a forced way. And I know today, in today's world, 4 or 5 decades ago, back when we were children, um, there was really only a need for one income in the family.
Yeah.
But that went away pretty much in the 80s. Pretty
Yeah.
much from the 80s on, there's been a need for two incomes into a family. And if both people are working, it makes it really hard to take care of someone that's at home because people are out trying to create income. And so there's some other things that are just that our generation is dealing with that are like our mom and dad didn't, but things were different for your mom and dad. Things were different when they were kids, right?
Sure.
And so I remember that, like when my grandfather was dying of cancer, my mother stepped in because she didn't have to work full time.
Yeah. 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 And then, the other part is that unfortunately, right now, because people aren't planning for long term care, 30% of that burden today is falling upon the children. So that's a big driver for a lot of the people we speak to every day. It's I don't want to pass a burden along to my children.
Yeah.
What I want to do is protect my assets so that, when I do pass, my children have, a legacy to enjoy financially that I can pass along. And certainly my wife and I are older parents in life. We were blessed enough to adopt a son at birth, but I'm a 51-year-old with a 5-year-old son. And so, as I look at our financial picture, I think about, and the fact that he's not going to take care of me when I get older. So I want to be prepared so that when we need care as we age, and I plan on living, to 90 or 100, I mean, like everybody else, but I want to make sure that I'm able to access care without becoming a burden, physically or financially to
Yeah.
myself.
So
Uh,
let's talk about, like, I know just a little bit more statistics.
yeah,
Um, let the listeners know some numbers about what it costs to take care of
yeah.
an aging person. Like, there's got to be some numbers out there.
There are. Let me start with this. Let me define what long term care is first, and then I'll jump into the cost because it will help. So when you think of long term care, the definition of long term care is basically a range of services that you can engage to support yourself who are unable to perform basic activities of daily living, is what they call those, and you'll hear the acronym ADLs. And that's what that stands for, activities of daily living. It's bathing yourself, being able to dress yourself, feed yourself, cognitive impairment. Those are all activities of daily living. When you can't perform 2 out of those 6 ADLs, then or have cognitive impairment, then that enables you to go on claim and engage these services, right? And so, when you're thinking about the cost, it's not cheap, right? And a lot of people make the mistake of thinking, well, Medicare will cover that. It won't. Unfortunately, right now, long-term care expenses is the number one reason for bankruptcy in America because you just don't prepare for it.
Let
So,
me jump in real quick and just
yeah,
throw something out
yeah,
there, because these guys know I'm an investor. Part of the Freedom Factory is we talk investments, and that's another way to multiply your money. And I had looked into in Florida, to own real estate, but the home, it was homes in residential areas, but the home was set up for aged care living.
yeah,
So there was
yeah,
like a room, like you get a 5-bedroom or 6-bedroom house, you
yep,
set it up for them. And I had a few sit down meetings with people that were doing this,
yeah,
and they were showing me the business and the books, and they were renting like the full care, like the room and the nurse, the care, $5,000 a room. So if you had a 5-bedroom house,
yeah.
$25,000 a month
Yeah, and that's
of.
that's probably cheaper than what they would go pay at a assisted living
Well,
community
that's what
or
I was going to ask you. Like, so there's got to be different levels of care. There's got to be that. And then there's got to be even another level. Like, what does that look like?
yeah, so the levels of care that most people engage, number one is private duty in-home care, right? And all that means is someone they typically call that non-skilled, so they're not medical necessarily in nature, but they help you bathe, cook, clean, kind of those necessities of life, right? Um, Today, if you were, and I actually ran numbers on Tampa, Brandon. So if you live in Tampa right now, the average cost, this is average, it's not the nicest, but it's the average is about $5,100 a month if you had somebody utilizing in-home care. But remember, how old are you, Brandon?
52.
52. Yeah, we're the same age almost. So it's not about today. It's about 20, 30 years from now. And that's where people make the mistake. So in 20 years from now, that $5,100 bill goes up
10,000.
$8,953 to be exact.
If
So
the government doesn't stop printing money.
if they don't stop printing money, and that's only a 3% inflation rate, right? We're not at 3%. So
Yeah.
assisted living would probably be kind of a next level of care there where it feels like independent living, but it's got some nursing services tied to it. Today, that cost is, right at $4,500, depending on where again, that's the average. It's not the nicest. But in 20 years from now, that cost in Tampa is going to go up to, just short of $8,000.
Yeah.
And then nursing home is the highest level of care where you really just can't do anything by yourself. And today that's $12,000 a month, and it will double. in the next 20 years, it'll be closer to 24,000. So if you think about where you are today and where you might be later in life, um, these are the things you have to plan for, because financially you're one fall away, one diagnosis away. By the way, I'm preaching to the choir. I was diagnosed with prostate cancer 6 months, 7 months ago. I'm fine now. I'm moving forward and cancer free. But I preach to people every day. It's not about what you know; it's about what you don't know. And then it hit me, and I thought, oh my gosh, what if? And so you have to be prepared for those things. The good news is, and we can shift to this in a second, where long-term care insurance used to be, because I talked to a lot of people that say, well, my mom or dad or grandmother or grandfather had a policy and it didn't allow them to go on claim, and or denied their claim, or the company shut down, or a number of things. A lot's changed since then. So
Yeah, and a lot of from what I've heard, you know, um, generation we heard the term generational wealth, where you
yeah,
pass on wealth from one generation to the next, and some families do that well. Some families don't do that very well, and it's the ones that don't have a plan that don't do it very well. And what I'm hearing and reading is that there may be a substantial amount of inheritance coming. Maybe it's a $1 million estate. Maybe it's a $2 million estate that your parents own that you may be inheriting, whether you're an only child or not. But at 5,000 to $10,000 a month, 75,000 to $100,000 a year clip,
yep,
you can rip through, and that's if there is an inheritance. I've also learned, even with people I know in my circles, where things got tight for their parents, and their
yep,
parents went and got reverse mortgages. And
yep.
basically, the $1 million house has almost no equity left
That's
in the
right.
house
Yeah.
because they've been using the equity to get by.
I think
And
there's a statistic out there. It's like 70% of people over 65 have their equity or their assets. The majority of their assets tied up in their home. That's exactly right. And so, and the other thing that happens is most people will spin through their assets and end up on Medicaid. And that's why we have a national, healthcare. One of the reasons problem right now is because, the number one reason for bankruptcies, long-term care and unexpected medical expenses, as you spin through those assets, and you spend those assets down and you end up on Medicaid. Now you're reliant on the government, basically to take care of you. You don't want to be there. If you've never been in a Medicaid, I mean, thank God they exist. But if you've ever never been in a Medicaid facility, you wouldn't send your worst enemy there. They are not
yeah,
where they.
actually, I have. We do some volunteer service work, and I went to visit a gentleman that was dying, and just the smell in the
Yeah,
place.
yeah, it it's bad.
It's
It's
bad.
really bad. So, and so to tag team with that, so Medicaid in so many places is suffering. It's sucking, or creating this enormous debt for all of these states. And so, one of the things that's happened recently that not many people know about, especially in the Southeast, because it started in the Northwest, is there's actually 19 states that have raised their hand and asked for the ability to provide, or not provide, but to establish a long-term care legislation. And
Mm.
so their 19 states are in the process of working on legislating an income tax. And
Yeah,
that income
because I'm sure those states are going broke paying for insurance, paying for
that's right.
people. Like that's
That's
why they're
exactly
doing it. The states are going broke paying for the people that are sick.
that's exactly right. And so unfortunately the healthy and young W-2 workers in America are paying, or
Mhm.
will be paying, for those who, yeah, are in a place where they can't afford care and the state's taking care of them. So, you just have to be aware of these things. The other thing that the other suggestion I have for people, this isn't something that we did in my family. I wish we had. It wasn't until my mother got diagnosed that I went back and looked at the family history. 7 out of 11 women on that side of the family died from dementia and Alzheimer's.
Oh, wow.
right? It's all about your genes, right?
Yeah.
You've heard that before. So,
Yeah.
you know, we just didn't know that. And a lot of those women were diagnosed in their 70s and lived well into their 80s. And
Yeah.
so,
Yeah.
but there's
Side
good
note,
news.
I know you know this, Russ. Side note, but
Yeah.
for my listeners that don't, if you don't know what the word nutrigenomics is, you better find
Yeah.
out. You better
Better
find
find.
out.
Yeah.
And
That's right.
that just simply means that, yes, we do have DNA from our parents, but there are a lot of things you can do to maybe not necessarily have the exact same fate
Yep.
as those in your family. But that's a whole nother podcast, another
Yeah.
conversation. So
Yeah.
we've set the table. We've set the table for everybody, kind of like this is what's out there. So now let's talk about what you guys at Sure Answer are doing and how our listeners can
Yeah.
how they can maybe take a look under the hood, see like if this is something for them. And so let's talk about what you guys do.
Absolutely. So we set out into the marketplace to disrupt it by simplifying long term care insurance. Why? Because in the past, long term care insurance is very complex. It fascinates me. Even people that have been selling it sometimes for years and years and years like to talk about how complex it is. It doesn't have to be. And so, thankfully, the marketplace and carriers like Nationwide, One America have really innovated new products that have made them simpler to engage, easier to afford, and are products that you'll use 100% of the time. Here's what I mean by that. So older long-term care policies, what they call traditional long-term care, is a lot like your car insurance or your home insurance, what we call use it or lose it. You're only going to use it if there's a catastrophe, right? You're never going to use your home insurance unless you have a flood or a fire or, whatever it may be,
Or a hurricane.
or a hurricane, or a hurricane. Hopefully you have that insurance. It's not cheap these days. So that's the way traditional long-term care used to be. And the, the not so great part about that, and it's still a good solution for people that want long-term care and may not be able to afford other types of long-term care. But you pay on that, basically usually till you die, right? As soon as you start paying on it, you pay on it to the day you die. And if you don't use it, you just lose it, right? That's money gone. Today, there are policies that have been innovated, and these are policies that are actually life insurance policies that have long-term care riding on top of them, right? And so it accomplishes three things. It provides a death benefit. So if you die, your beneficiaries will be left, obviously, a death benefit. It provides a long-term care benefit along with inflation riders, so that over time it keeps up with inflation. So going back to those costs, if you're in an assisted living, and today that might be 4,500, but in 20 years from now it's closer to 8,000. That policy will continue to increase with that inflation, which is a great feature. And then, so you get a death benefit, you get the long term care benefit if you need it. If you don't need it, and let's say you're 85 and you needed to access cash out of it, it actually has a piece to it. It's kind of more of a return of premium than anything, but it has a cash value. And so, a totally different product than we used to have. And I love we write a lot of Nationwide because it also has what's called a cash indemnity feature. Used to be you would go on claim, like let's say I fell and I'm 65, I fell, I broke my leg, I'm not able to perform two of those six ADLs, activities of daily living. I would then get diagnosed from a physician that says I'm in a place where now I can receive these benefits. I submit that to Nationwide, and then I go on claim. When you go on claim, you used to have to get reimbursed for services, which is a little bit of a hassle. Now, cash indemnity, Nationwide just sends you a check for the full benefit every month. And what I love about that, Brandon, is you can use that check for whatever you want. If you want to pay off, use it to pay your rent or your mortgage where you live. If you want to go to China for some other, alternative therapy that might be available there, not here, whatever you want to use it for, you can use it for. And they have policies where you can actually write the policy for you and your spouse together. So again, the policies have just changed.
So that's good. I mean, it gives you some alternatives to how you can use this cash that you're laying out. Like it's money out of your pocket going in the insurance, but it's not something that's just sitting there waiting for you to not be able to do these ADLs. There are some cash value there. There's life insurance on top of it.
Yeah.
So that's good. So how do you go about, you know, someone says, yeah, I want to get some information on this. And I know in the show notes we're going to give you guys a link that will connect you with Russ and his team, and for free they will do a sit down with you guys. They'll jump
Yeah.
on a call or a Zoom with you guys and go through it and just but you know, you have to give them some of your information, because is that kind of how it works? Like how did the next thing is people are thinking like, what's this cost? So how
Yeah.
did the premiums kind of work? Like
Yeah. That's a great question. So it's probably, one of the top cost or top questions is cost. And so um, there's really two directions you go when you think about cost. First of all, there's a lot of information we're going to gather. Obviously, where you live matters. Your age, your health, the cost of care where you live, the amount of benefit that you want based on that, the benefit period or how long you could be on benefit. Inflation's a big part of that. What carrier you want to go with. So we sit down and customize really each one of those. You've done one of those policies, you've done one. Because Brandon, what you and Lynette may want is going to be different than someone, that may not be in your same situation or live where you live. So, but I would say most people go down two paths. They're either what I call budget driven or benefit driven. But budget driven means, people will say, Russ, I've got $300 a month I can afford, or $350 a month I can afford. But I really want long-term care coverage because I know I need it. Then we'll back in the benefits to that and align that policy for them based on what they can afford, so that it works, right? And then other people say, I want to go through the full consultation and understand, here's my financial picture. Here are the assets that we have, family history, health, all those things, where we live, and then we work a plan together. And so it's very customized. And like you said, our passion is connecting with people. You know, if you think about it, we're trying to provide you with a licensed guided tour, if you will, of long-term care. And in some cases, people, I mean, we've gotten on the phone with some people who have so many assets, it probably, maybe it didn't make sense for them because they do have so many assets in place growing at a certain percentage that they may not need it. Um,
yeah.
but you'd be surprised at how many people, when we go through the exercise, even people who have a net worth of 3, 4 million are like, man, I think I still want to put this policy in place.
Yeah, well, that's the whole purpose of this podcast, right? Is to get people in a position where they're no longer handcuffed by the anxiety of money. That's the
Yeah.
purpose of this podcast, is to get
Yeah.
people where they can live life without worrying about money. But the other side of that is, I know right now about 80% of Americans live paycheck to paycheck.
Yeah.
And if you're living paycheck to paycheck, probably a good chance you're not sitting on $1 million in some retirement account, or $2
Yeah.
million in some retirement account. If you're living paycheck to paycheck, you probably have less than $300,000 in net worth. And if you do have 300,000 in net worth, it's in your home.
Yeah. No question. And another statistic that just completely hit me between the eyes, Brandon, is I've stated earlier, 70% of Americans 65 plus will need long-term care. 43% of long-term care claims today are for those under 65.
Wow.
That just blew my mind. And so, the other thing that's eye opening, only 3.1% of people have long-term care insurance.
Yeah. Well,
And
that's
so,
why I wanted to do this. When we connected in Nashville, I thought about it, and it just started to make more and more sense, especially for my listeners, that they know that this is aware. Like literally, we all need to drive cars. It's a convenience. Driving a car is a convenience. We don't have to, but can you imagine going with out cars, right? And then thinking and finding out, oh, there's this such thing as car insurance. Like maybe you got in a car wreck and you didn't have any insurance and your car is totaled out. Now what? Well, you're out. You're out of luck. You got to go get another car. You got to pay for it, right? And so there's a lot of people that don't know this insurance is out there. And I'm not saying that everybody has to go out and buy it because, like you said, for some people, it's just not. If you got enough money, you don't need it. But it is something that I think everybody should investigate to find out if they want it and can move forward with it. And that's the point.
Yeah, yeah. And then one other thing I'll throw in there too, Brandon. We actually are licensed to do both individual long-term care and long-term care for corporations. And in some cases, if you own a business, you can write these policies through your business, and there's tax benefits there, which we do. Um, if you're with a company or own a company that has, is a little larger, say 100 or more employees, you can actually access bigger benefits through companies like Chubb is a great company that we work for in that sense, and provide these benefits for your employees. And then if you live in one of those 19 states, I'll warn you, there's only one way out of that tax. If you want to keep your money, it's to have your own long-term care insurance policy. I'm in Tennessee, and thank the Lord, we're not on the board right now to institute this tax, but we are doing a lot of that for people
I would
too. And
imagine Florida is one of them. Is like the retirement capital of the world.
you would think not yet, not yet, but you would think for sure.
Florida does pretty good with money, but with all these hurricanes, I guess it's we got enough. I think we got enough toll roads in Florida to have
It,
revenue forever.
well, I grew up in Orlando, Florida, so I know all about taking an interstate and making it a toll road. I'm in Florida too. If you can't tell, these pictures behind me are not what I have in my house in Nashville. We're actually on vacation up in the Panhandle and watching this storm too. But the main thing is we're just here to partner with people like you, Brandon, to share the word. Our model to grow our business to serve others is through partnering with people who have influence, and you're a great steward of that responsibility. And that's what makes you so passionate about serving people, empowering people with habits that are wealth building habits. And we're here to help people protect that. So,
Yeah, I appreciate that. We've done well as a family, but we got a long ways to go for our goals. But I do know we are just a few steps ahead of some people, and our mission here with this podcast is to kind of reach a hand back and let me kind of help you to get where we're at. And so that's what this is about. I've learned a lot of things the hard way, and the money that I have spent learning those things, I hope to help other people avoid by
yeah,
education. And so I think this is a perfect piece for our audience to look at as a really smart way to preserve capital, preserve assets, because
definitely.
how fool, like I tell them, how foolish would it be to go through life, build this big war chest of money,
Yeah,
and to like not have a will or not have a trust and
yeah,
just allow that to be consumed by state taxes and
right.
government. Yeah, that's craziness. Like, so we
Yeah,
we talk about that stuff. And so but yet there's still a lot of people that don't have wills and don't have trust, right? So
I know. And I'll throw this in there too. We really kind of focus on two things: long-term care and also term life insurance. And we do a lot of instant term life insurance for people. And actually a lot of the term life companies now, to your point, including some of the ones we write, actually include in them a free will and trust for that very reason. And so, yeah, that's a
yeah.
great point.
Yeah. Well, I
And
appreciate you being on. I really do.
yeah,
Any other thing you want to add before we get off?
just go to, I think it's, if I'm not mistaken, Suriance, SURIANCE.com /Freedom
Freedom
Factory.
Freedom Factory. Yeah, we'll
There you
we'll
go.
put the link in the show notes. And when we send out like next Monday, there will be an email that goes out for everybody. The link will be in there again.
Good.
So they'll be able to click that link. That link will connect you to Russ and his team,
Yeah.
and you guys can get the information you need in there to start investigating to see if this is something for you and how it might fit in your budget and long-term planning. So I appreciate it, Russ. Good seeing you. Thanks for being with us today.
Thanks for having me. And man, blessings to you and your wife. Good luck on the storm.
You guys as well. It's going to come by us first, so we'll be watching it as it goes by there. So you guys head back up to Nashville. Get out of here. So,
Thanks, man.
thanks a lot. Talk to you later.
All right. Bye bye.